Hey everyone, Sean Taggy and Mark Hart here at Memphis Investment Properties. Quick question we're going to answer today is what is debt service? A couple people asked this, I'm just curious about what it means. So yeah, of course, we'd love to define that. So debt service is the annual payments you pay to a lender on a property. Typically for investment properties, people are getting 20% down, basically an 80% loan to value on their property. So whatever you'll pay to the lender, every month and AKA every year is called debt service, also known as the mortgage on the property.
Right. And that mortgage is going to be made up of two factors. One is going to be the principal, and the second is going to be the interest. So every time you make a mortgage payment, you're paying both those items down, principal and interest. And what's great about the mortgage is that the principal, that is basically, that's yours. Think of it as a forced savings account, right? Every time you make that payment, that money goes into the property. That is yours to recoup at a later date, right? It's just in the property. Now, the interest, that's how the bank makes their money, right? That is, you're never seeing that money again. That is the whole reason why the bank is giving you this loan. What's amazing about getting a mortgage on a rental property is most folks will get it amortized over 30 years. And what that means is over 30 years, the loan balance will be zero. So you will own the property, 100% of the home in 30 years. But who really paid for the majority of that house? Well, it was the tenant. And Sean, why don't you talk a little bit more about how the principal and interest changes throughout the time?
Yeah, so lenders, in order to calculate their risk better, is they upload it's amortized. And so on loans at the very front end of the payment, say you're paying $1,000 a month, the very first payments, it's going to be high interest loaded. And then over time, the principal payments get more and more and more. So like for your first year, it might be you pay $1,000 a month, 900 of it goes to interest, for example's sake. That's just throwing something out there, and $100 goes to principal, paying down that loan value. But on the last end of the amortization schedule, so maybe the last year 30 of your mortgage, maybe $900 of it is going towards your principal and 100 is going towards interest. So it just gets better and better over time, your principal reduction, which is awesome. That's why we love real estate, staying it long term as well.
Yeah, that's it. And most importantly, who's actually paying that down is it's the tenant. And finally, the interest that you're going to be paying that lender is also going to be a tax write-off in certain situations. So it just gets better and better and better. So of course, talk to your accountant to see if that will apply to you. But hope that answers all your questions about debt service or your mortgage payment, principal, and interest. If you have any other questions, please reach out to us. Contact information is below, and please hit subscribe. Talk to you
Thank you,
later.
everyone. Have a good one.